Elliott waves count at a light speed. Elliott waves count at a light speed. We are on a monthly chart of Skyworks Solutions Incorporation, Epic Sierra Whiskey Kilo Sierra SWKS. This is a Nasdaq 100 component. And we want to talk about Elliott waves counts at a light speed. Alright? So our reference point, as I mentioned to trader using a specific date, is 2009. Okay? So we're going to start counting waves at a light speed. So looking at this chart, we're just going to start counting wave. We will say, all right, this is the first wave, okay? And then we're going to say this is the second wave. Color it into orange. And then we're going to say, all right, we have price went up, okay? Price pulled back, and then it went up. For too long, it looks to us that this is, okay, a complex, a third Elliott wave, probably a complex, a third Elliott wave. So we may say, okay, price went up all the way here, all right, and then it pulled back a bit here, all right, and then it went up. So we may say, looking at this chart, first wave, second wave, and the third Elliott wave from here all the way up here. So we will say that we have a complex third Elliott wave. Yes or no? Okay, let's put a vertical line there. This is a Elliott wave counts at a light speed. Let's move on. So if we stop only on this monthly chart, that will be, okay, a trading mistake, yes or no, because we do not count wave on a single time frame, all right? So we will say, all right, we are at the end of the third Elliott wave, all right? So first wave, second wave, we did not cancel the first wave, and now we have a complex third Elliott wave, which has been subdivided into a 5 manual wave. So at this point in time, what do we say? We will say that this is the fourth Elliott wave. So we will say we are now in the fourth Elliott wave, and there is a high chance that we may have the fifth wave. Everybody agrees? All right, check it again. This is a Skyworks Solution Incorporation. We are on a monthly chart. All right? But if we stop on a monthly chart alone, that will be, okay, a trading mistakes. All right? So in order to zoom into, okay, the price action, all right, we need to go to the weekly chart. So I'm going to go to a lower time frame, weekly chart. And as we go to the weekly chart, you will see that it's become a little bit clearer. We can now see the internal waves. All right. Now, the first one that we want to look at is the first manual wave of our third Elliott wave. So we were labeling, it makes sense to us on a monthly chart that this was the first manual wave of the first wave of the third wave. This is the second manual wave of the third wave. And this is the third manual wave of the third wave, and this is the fourth manual wave of the third wave, and this is the fifth manual wave of the third wave. My friend, one more tool I want to use quickly to say something to you is that if we highlight our third Elliott wave that we have seen on the monthly chart, and we compare the fourth Elliott wave to our third Elliott wave, we can see that, in fact, our fourth Elliott wave went to the 61.8% Fibonacci retracement level of our third wave. So here it is, what we are calling the fourth wave, went down up to the 61.8% Fibonacci retracement level of our third Elliott wave. Before we continue, I need to say something to you. Whenever I see a fourth wave that went beyond the 50% of the third wave, I put a big question mark on that fourth area wave. Whenever I see the fourth wave going up to 61.8%, I start thinking that probably my wave count is wrong. Normally, the fourth area wave is shallow, 38.2% Fibonacci retracement level. I would say maximum 50%. Even 50% is a lot for the fourth wave. Now here we are, what we are labeling the fourth area wave. It went up to 61.8% Fibonacci retracement level of our third area wave. This starts ringing, all right? You're letting me that just something did not add up. Normally, it's the correction that will bring the price up to 61.8% of the third area wave, normally. So the bell is ringing, so as soon as I see that, I'll just remove this one and say, this is not the fourth area wave. This is not the fourth area wave, in my view. So let's go back to the charts. So we were calling this one the first area wave. It looks like a first wave because 2009 it was just going up. Looks like an extended first area wave. Now this is a correction of the first wave. Price went down. Okay, did not cancel the first wave. So far so good. But as we are looking at the internal wave of the first minor wave of our third wave. So we were calling this the first minor wave of our third area wave. Look at the internal wave. Let's zoom into it, my friend. Let's zoom into it. We are here. This is the first, what we were calling on the monthly chart, the first minor wave of the third wave. But looking at the internal wave, my friend, this thing has three waves. All right, it's not an impulsive wave. Now, the internal wave that we are looking at now becomes clear on the weekly chart to us. The internal wave becomes clearer to us where we zoom into it, that in fact is formed of three waves. Went up, pulled back, went up. Once again, this is a violation of the area wave principle. So this cannot be first minor wave of the third wave because the internal wave are three. Well, this is not an ending diagonal. So therefore, this is not the first minor wave of the third wave. So, which means if this is not, okay, so it's now in fact we see the internal wave is 3, 1, 2, 3. So bringing us now to say that the correction in fact, let's start removing some line here. This is, okay, area wave count at a light speed, trying to validate our wave count. On a monthly chart, everything looks okay. But now as we zoom into it, we are start removing things. So now it's clear to me that in fact, this is part of the correction. Price went down, went up, 1, 2, 3, and came back down again, right here. Boom, 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 boom. So the second wave is a complex correction. Looking at internal waves on the weekly chart. This is just the beginning of our wave count. So now where is the third area wave? So we also discounted that this is not the fourth area wave. So in that case, this I would say, in my view, this is part of the correction because it went down too far. So I will now rectify by okay things, and I will say that this is in fact, I'll color it now into pink to please, okay, you know what I'm going to say. No, I'm not going to say it to them. And all right, so this is the fourth area wave because this one went down too far, up to 61.8% Fibonacci retracement level of the third area wave. A third area wave that is extended. Normally, the fourth wave should be shallow. All right? If the third Elliott wave is extended for too long, we will not expect, okay, the fourth wave to go even beyond the 50%. All right, 38.2% will be reasonable. So this that's why I discounted it straight away as a fourth wave. Okay, I discounted this is part of a correction. So therefore, this becomes now my fifth wave, and this is my fourth Elliott wave, which I highlight here now into pink. All right. Let's continue our wave count. So far, so good. We have identified the fifth wave and the fourth wave. We have also identified the first wave and the second wave, bringing us now to the last part of our the puzzle, the last piece of the puzzle. This is now our, okay, third Elliott wave. Wave count at a light speed. This is the third Elliott wave. Okay. In fact, in my view, that third Elliott wave started here. But if we zoom into it, started from here. All right, started from here. So this is our third Elliott wave, a fourth Elliott wave, the fifth Elliott wave. Now we are having a correction that is bringing the price into the zone of okay, 50% and 61.8% Fibonacci retracement level. We may have, okay, a zigzag, all right, down, up, down, all right, or maybe go up from a flat correction. Very different type of correction may take place after that. Now here we are, as you can see, we have now finished our wave count, Elliott wave count at a light speed. First wave, second wave, okay, has been a complex second wave, 1, 2, 3, third Elliott wave, a shallow fourth wave, followed by the fifth wave. This is a part of a correction that is underway. It makes sense? If we use also the height of the first wave, here it is. So how do we measure the height of the first wave? From the origin of the first wave to the highest point of the first wave, that's the height of the first wave. If we project it above, okay, the height of the first wave, attention please, my friend, it brings us to this line here, okay, using the height of the first wave. All right, it brings us here, initial target right here. Price break above that level, retest it, boom, up. Price goes above that level, market geometry, we project it, bringing us to the end of the third Elliott wave. This is also giving me a bit more confidence that probably this is the end of our third Elliott wave, which is 2 times the height, okay, of the first wave. Height of the first wave, first time, and second time, okay, pinpointing the top of the third Elliott wave. The fifth wave follow, breaks above it. Now we are in a correction. This is about Elliott wave counts at a light speed. If you have any question, put in the comment section. You have any suggestion, put in the comment section, and in due course, we will record another video to answer your specific question. If you go back to the monthly chart, you can see that on the monthly chart, we were tempted to label the waves in a different way, but as we use different time frame, this is one common wave count mistake when traders are stuck on one single time frame, they count wave, they see things differently, but as they change time frame, they will quickly discover that, okay, their wave count is not valid, and they need to rectify their wave counts. All right? Do not use a single time frame as a wave count. If we go to the yearly chart, you can see that this stock, you can see here, in 2000, you see this candle here, you see here, you see this candle with this long shadow on top, was alerting that a correction was underway. On the yearly chart, can you see it? And the price went down after that. And then now we have a new cycle. Look, this is the end of the bullish trend, and the correction began during the shadow here, and the price went down. What do we see? Look at the way the price went up here. All right, will you agree that it's similar to what we see now? Let me remove this line, and then you can see clearly. Open your eyes and do not blink, my friend. Do not blink. Okay. All right, a do not blink. Okay, I'll leave the other one there. Okay, I'll leave it here because sometimes. All right. Okay. Okay, can you see this candle here? Similar to this one, the shadow and the bearish candle. So using a fractal pattern, we will say that there's a high shadow we may see, two bearish candlestick bar down like we see here, followed by a kind of a consolidation like this before a new cycle. So another bearish, this one will close bearish, another one will follow like this, followed by a kind of doji and a blah 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 before few years later. So this thing before a new cycle may begin, you may see 1, 2, 3, 4, 5, 6, 7, 8 years. After 8 years again, before we may see a new cycle. Looking at this, what has happened here before, we can have a bit of idea what is likely to take place here. But it doesn't mean that this is what is going to happen. All right? See this, the pattern here? All right? It makes sense? It is also powerful. We are the TSTW24 traders talking about Elliott wave count at a light speed. Happy trading to you all, and I speak to you soon.